Welcome to Balancing the Ledger, where tech and finance intersect. I'm Jen Viechner.
And I'm Jeff Roberts.
And today we're joined by Shamina Singh. Welcome, Shamina.
Hey, thanks for having me.
So you are the Executive Vice President of Sustainability at Mastercard. And in 2013, you founded Mastercard's Center for Inclusive Growth. What was the business case behind that?
It's funny. We started at Mastercard looking at the role of financial inclusion and the role of people who really have been left out of the economy during this whole digital evolution or revolution, depending on where you're sitting, and realized that the role of Mastercard in that conversation was about connecting people and bringing them into the formal economy so that they could enjoy the full protections that come with a regulated financial system. So I actually started out on the business side at Mastercard when I joined because I was working with governments around the world to help digitize their social benefit programs. And all of the learnings that we started finding when we started getting into these conversations with low-income people in developing markets, realized that there weren't a lot of businesses in the space. And we actually created the Center for Inclusive Growth as a way to bring all of the learnings together in one place and open source them, because we realized that this wasn't a once in a blue moon activity. This was a trend that has only become more prevalent. And so we wanted people to learn from our mistakes and our solutions.
I found this really interesting because normally in this show we talk about the future of payments and cutting edge cryptocurrency and stuff, but this seems a lot more like rooted in the real world. And it sounds like you work with it a lot. Who is still using cash? It sounds like a lot of people. So tell us a little bit about the cash economy and who's part of it.
Yeah, so it's everybody's part of it, but what we know, approximately 85% of all transactions are still conducted in cash in the world.
Globally, that is.
Globally in the world, about 30% right here in the United States. And so, when you're working for a company like Mastercard, which is in the digitization of payment space, it really opens up from the business perspective a runway of opportunity if cash is your competitor. Instead of any other payment company. And so that's really where all of this started. And once you start to really dig into the costs of cash, like how much the transparency issues, the leakage issues, the corruption issues, it starts to get you really thinking about, if you started to disrupt cash with digital, what would that mean for more people in the world?
And how are you disrupting them? And what is some of the technologies and innovations that you're applying to do this?
So, it's funny. Do you know what a QR code is?
Yeah.
I do.
Okay. So QR codes are a really disruptive force in emerging markets because what they allow the same level of technology that you would get from a $300 point of sale device that you might see at a grocery store or a big market. A QR code is a very inexpensive way for a small merchant in an emerging economy to process transactions. So we actually created the standard for India. And so the QR code standard for India was actually created by Mastercard and adopted by the entire country. At one point, I was in India fairly recently, and I actually took a rickshaw using a QR code, which I've been to India many years and many times, and the idea of actually not having to fish around for rupees or change or whatever, and actually jump in a rickshaw, which is a very small motor scooter, to get from point A to point B and pay with my phone, it's pretty cool.
How similar is the technology that you're deploying in these emerging markets to what businesses and customers here in the U.S. do and use?
It's interesting because we actually think of it sort of as a reverse innovation. So in the United States, for example, the banking system is so mature here, and the legacy systems are all here, and the regulations are all here. In some of these emerging markets, you don't have things like credit scores or credit agencies. They're just now coming online. And so all of these things are being developed now in real time in emerging markets. So part of the interesting thing has been for us, because we're a global company, to look at the solutions in some of the emerging markets and try to adapt those solutions in more developed markets. And so it's a little bit of a reverse innovation play that I think is really interesting.
Can you give an example?
Sure. So here in the United States, for example, lots of people use payday lenders, and because they don't have access to banking system. Lots of very, very small micro business owners don't have collateral in the same way that maybe big business owners have. So we actually had a partnership with Citi and Apple, where we worked with an organization right here in New York City to help very small business owners called microfinance organizations with Grameen USA, who had been transacting in cash for these very tiny loans, average size 2,500 maybe, transacting in cash, and to say, we're going to train you, we're going to provide these lending services, but it costs a lot to spend the time doing that, and the safety of that is a huge concern. So we actually worked with Citi and Apple to say, let's upgrade the technology, let's make sure they get bank accounts, and let's make sure that they have the equipment they need to bring more efficiency to the payment system and actually more safety. What that's meant for these shop owners is that they're able to conduct business more effectively, but Grameen USA has actually tripled their ability to lend.
So what is Grameen USA?
So Grameen USA is a microfinance organization, but in the United States, it's actually called a community development finance institution. So it's a treasury designation, basically, that allows for banks to lend money to these types of organizations, and then these organizations can lend to people with very little means, who may not have credit scores or the collateral that they would need to go to a larger bank to get the same rates.
And you're saying up until now, this organization was providing these women entrepreneurs with like stacks of cash.
Yeah, depending, on what, it's pretty interesting. You would think that we wouldn't see that, right, in the United States, but that's actually more prevalent than you would think. I mean, look, when you're trying to pay your bills, or you're trying to start a business, or you're trying to sell flowers, or do whatever, you're not thinking of, three franchises and 10 big businesses and 100 employees. You're trying to think about, I'm a woman, I have kids, I'm balancing school, I'm balancing all these things, and I want to start a business and I want to feed my family. So you start with where you are. And I think that's what's so interesting about these organizations, is that they are serving people at all levels of the economy. It's really interesting.
And what are the benefits for them of moving away from cash and doing this all digitally?
So for these women, for example, who are starting their business, working on a digital environment is not their everyday. They're not digital natives, if you will. And so the idea that they might be able to grow their business exponentially by going digital and by getting the tools that they need and the education and the responsible, lending education that they need in order to grow their business more effectively, we're seeing scale in a way that we hadn't seen before. So when you move out of a cash system, you can actually transact with people you can't see. So when you're dealing in cash, you can only transact with people you can see, or people that you trust enough to carry your cash to another place. But you're really constricted.
One thing we haven't talked about that's a component of this is data. A lot of what you're doing here is data-driven. Can you talk a little bit about what you're doing there and what the insights that you're getting are?
Sure, because it's really important. I know that most of your guests probably tell you a lot about, like a big data and how data is transforming the world. That's true. But you know what else is happening? We're seeing a bigger and bigger gap form between the data haves and the data have-nots. So here's an interesting thing just about credit score, right? So I mentioned before these shop owners, and looking at their buying and selling habits with their partners like Unilever. So we have a partnership right now in Kenya where we're working with Unilever to say, can we help the shop owners that are in your supply chain who are creditworthy because you see them buying from your supply chain every day. Can we use that as a proxy for credit score to get them a low interest loan from a regulated bank? That's the idea of using, it's not high tech, low tech. This is about using tech for where it matters most and how to help the most people.
You've also have a new partnership with the MTA in New York, the subway.
That's pretty exciting.
Yeah, I mean,
listen, I'm personally excited because as a New Yorker, I've been here for many, many years, and having been somebody who fumbles around all the time, like carrying my backpack and my purse and everything else, this idea that, you always have your phone out or you always have a card handy that you can just go and tap and move through, that time efficiency, I think is going to be a big time saver for a lot of people. For a New Yorker, time is money, and that's everything.
Can
And
MasterCard do anything about the rats? Or?
We'll have to save that for next time. Thank you so much for being here,
thanks for
Shamina.
having me. Really appreciate it.
I'm Jen Viechner.
And I'm Jeff Roberts. For more Balancing Ledger, please go to fortune.com.
We'll see you next time.